Washington, D.C. food trucks are still trying to get their businesses back on track. The federal employees who were their biggest customers missed 5 weeks of pay in the longest partial government shutdown in U.S. history.
We still get an average of about like 50 customers a day, but since the shutdown, some days we'll get like 6 customers. The lowest we got was like 3 customers. There's even days that we don't even go out because it was so bad, so we just go back home. It's not even worth it.
The shutdown's just one of the many issues adding to economic uncertainty, and monetary authorities are being cautious.
There is elevated uncertainty around several unresolved government policy issues, including Brexit, ongoing trade negotiations, and the effects from the partial government shutdown in the United States. And while most of the incoming domestic economic data have been solid, some surveys of business and consumer sentiment have moved lower, giving reason for caution.
The Federal Reserve has held its benchmark interest rate steady at a target range of 2.25% to 2.5%. It also signaled it's in no hurry to make a move, either up to keep consumer prices in check or down to give the economy a lift.
I think the Fed is doing a little bit better job of being transparent, but at the same time issuing the message that they want to issue, which is, look, we're data dependent, we're aware of what's going on in the U.S., we're aware of what's going on outside the U.S., and we're not going to try to front run this thing and take the punch bowl away too quickly.
Thanks very much.
Fed Chief Jerome Powell says a prolonged trade war with China is likely to sap business confidence, and another government shutdown would chip away at economic growth. A hard Brexit could also be a threat to global financial stability. So before the central bank pulls the trigger on interest rates, it'll need a better view of the target it needs to hit. Paolo Montecillo, TRT World.
Well, for more on the Fed's dovish turn, let's go to Peter Schiff, CEO and Chief Global Strategist of retail brokerage firm Euro Pacific Capital. He joins us now from Dorado in Puerto Rico. Welcome back to the program, Peter. So it's quite a remarkable turnaround for Jerome Powell. Only weeks ago, he was basically telling people to expect at least a couple of rate rises this year. Now he's saying he's putting them on hold. What do you make of his sudden U-turn?
Well, there's nothing remarkable about it at all. In fact, I've been expecting Powell to make that flip ever since before the very first rate hike back in December 2015. I said from the beginning that if the Federal Reserve ever tried to normalize interest rates, they would fail. They would have to abort the attempt prematurely because it would cause a bear market in stocks and a recession. And that's exactly what they've done. But if we wait a little bit longer, soon the Fed is going to be back at zero and doing more quantitative easing.
Interesting prediction. We heard in the story there, Jerome Powell cite lukewarm US inflation as well as sluggish global growth as the main reasons for what he said about future rate hikes. Is that all it is, or do you think politics might have a part to play here?
Well, that's just the excuse. What Powell is trying to do is help out the U.S. stock market and the U.S. economy without admitting that they need help. So he's coming up with this nonsense about the global economic uncertainty. That has nothing to do with it. It's all about the U.S. stock market. In fact, the only thing that changed between the last meeting and this one is a bear market in U.S. stocks. And that's what turned the Fed around. And of course, prior to that, the U.S. economic data was already weakening. It's just that the market wasn't paying attention to it, and they finally woke up.
We know we had 4 rate hikes in the US last year. Donald Trump, pretty much after each one of those, attacked Jerome Powell quite personally for his decision to raise rates. Do you think that might have played on Jerome Powell's mind at all?
Certainly, there was a lot of political pressure on the Fed, but the mistakes that the Fed is making is not raising rates. The mistake they made was cutting them to zero in the first place. The mistake they made was leaving them there for as long as they did. We're going to pay the price for that. This next recession is going to be much worse than the Great Recession of '08, thanks to that monetary policy by the Fed. And this bubble is so big, there's no way to reflate it. This time, instead of just a financial crisis, the United States is going to have a U.S. dollar crisis and a sovereign debt crisis.
So what can we expect then in the near future from the US Fed? Are they going to maintain this holding pattern, or do you think they'll actually slash interest rates soon?
Well, they'll hold off on cutting rates until the next leg down in the market, or until the economic data is so bad that it's clear that we're in recession. But I still believe the next move by the Fed is going to be to cut rates, and they're going to go all the way to zero. I don't think they're going to be timid with quarter-point cuts. It'll be one and done down to zero, most likely, and then they're going to start quantitative easing again. But with the exploding federal budget deficits, I think we could be running $2 to $3 trillion annual deficits in the United States during the next recession. And that means QE4 is going to be bigger than QE1, 2, and 3 combined. And you know, then the world is going to be onto this. They're going to figure out that this is QE infinity, that it's impossible to ever normalize interest rates or reduce the balance sheet, that it's going to grow in perpetuity, that the Federal Reserve is an engine for inflation and debt monetization, that America is just a gigantic banana republic without the bananas, and then the bottom's going to fall out of the dollar. It's going to get killed. Gold's going to go up. Money's going to flow out of U.S. assets into emerging economies and other markets around the world.
Some bold predictions there. Peter Schiff, we will have to leave it there, but thank you for your time as always.